From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome now to Balance of Power. Well, today is Jobs Day in the United States, and boy, did the jobs come in. To take us through the numbers, welcome now Michael McKee. He's Bloomberg International Economics and Policy Correspondent. So, Mike, I'm not sure this is what the Fed Chair Jay Powell was looking for.
No, earlier this week, somebody did a meme of Jay Powell's face instead of Jack Nicholson in The Shining when he's breaking through the door. And I suspect that's kind of the way he's feeling right now. Wait till they get a load of these numbers. 263,000 jobs were created in November, and October's were revised up to 284,000 from 261. So a lot of job growth, a lot more than Wall Street anticipated. The unemployment rate does not change. The feeling was it would start to drift higher. Participation rate, though, is down. More people left the labor force, kind of surprising at a holiday time period. We also saw 30,000 retail jobs lost, which is kind of surprising at a holiday period. And here's the number that everybody was upset about. Average hourly earnings up 5.1% on a year-over-year basis. That's up, accelerating, and that's a problem for the Fed. Here's your chart of that. You can see there that average hourly earnings have been running higher in the last 4 months, and that's a problem. We had seen base effects kind of pushing those up, and they were expected to keep pushing them down, but they didn't. And so we are well above where the Fed would like to see average hourly earnings on a year-over-year basis, 3 to 3.5%. That's compatible with the 2% inflation target. The only good news, perhaps, for the president, well, he can tout the jobs numbers, but the unemployment rate for minorities actually went down. For blacks and for Hispanics and for Asians, those three categories all fell. And that's good news for the administration and for the Fed, which had been trying to make that happen.
And Mike, to your point about accelerating wage increases, actually, as I looked at the numbers, the month over month for the average hourly wage actually was double the estimate. It was 0.6% rather than 0.3%. So it's not going in the right direction. Thank you so much to Bloomberg's Michael McKee for that report on those jobs numbers. And now we're going to turn to the view from Washington on exactly what we're seeing in the jobs numbers and those wage numbers. And we welcome now Republican Senator Pat Toomey of Pennsylvania, who's normally in Washington. I'm delighted to say he's with us in New York today. Senator, thank you so much for being here.
Thanks for having me, David.
You've been outspoken on the issue of inflation. What do you make out of these numbers?
Well, I mean, first, it is kind of amazing, the resiliency of the American consumer, this economy in the face of a major tightening, right? There's the direct effect of what the Fed's done. There's the indirect things the market has done, backing up the whole yield curve, a very strong dollar. It's surprising to me that we haven't seen a deterioration by now, even given the lags that we expect monetary policy to have. But look, I think it looks like inflation probably peaked, but we are nowhere close to having this job done yet. And so the Fed needs to stay the course, because even if it rolls over from the 8% we were running at, it wouldn't be okay if it levels off at 5%, So I'm afraid we're gonna have to continue tightening.
Yeah, we're not out of the woods yet.
Right.
Let me turn back to your work in the Senate. You're not going to renew. You've decided not to re-up on this one, but we've still got a lame duck session left to go.
Right.
What, from your point of view, can be accomplished and needs to be accomplished in this lame duck?
Well, there's a few things that will certainly be accomplished, right? So the National Defense Authorization Bill is pretty much ready to go. I think that passes soon. There's got to be a one way or another to fund the government. There's really two ways, as you know, David, right? We could do a continuing resolution, which is what we call just continuing everything as is, or we could do what we call an omnibus, where we sort of reconfigure things and we spend create a new spending bill. So those are the two options. One of those is going to pass before the end of the year, in fact, before December 16th, because that's when the current funding expires. Then there's a lot of miscellaneous things that could find their way into that final spending bill. I'll tell you one category that I'm still hoping, and I know it's getting tougher every day, but what I'm hoping is that we do something to provide some legislation and regulatory clarity in the crypto space. We have nothing. We have complete regulatory uncertainty, legal uncertainty, and that leads to all kinds of problems, including, by the way, the migration of money and activity and entrepreneurs and developments to overseas jurisdictions where, as we've seen, regulations aren't so good.
So you've been outspoken on this before, and it's not like there's nothing going on in the crypto space. I mean, just mention FTX and Samuel Bankman-Fried was happening there. I know the House is having hearings before the year is out. Is the Senate, you're the ranking member of the Banking Committee, are you going to have hearings, and if so, when?
So I think so, but I'm the ranking member, not the chairman, so I don't get to make that call unilaterally, but I think we're going to have a hearing. I hope we do. I think we should have Sam Bankman-Fried at the hearing. And I'll tell you one of the things that's important for us to expose here, and this is an important distinction in my mind. What happened at FTX is horrendous, right? It looks like just gross mismanagement. It looks like total lack of proper governance and controls and really bad behavior by some individuals. It's not specific to the underlying asset. We have seen this happen time and time again throughout history with fiat currency and ordinary assets. It's unfortunately not that uncommon a story. So we shouldn't confuse the bad actors of some individuals with an underlying asset that, the code isn't guilty of anything here.
Yeah, exactly. I mean, commingling assets is something we've seen other places. It doesn't take crypto to do that.
Exactly. You can do that with anything, and people have.
Yeah, exactly. So you've had a distinguished career in the U.S. Senate, and you've accomplished a lot of things. I'm curious, what do you think is one of the things you're proudest of that you got done? And then I will turn to what has yet to be done that you're not going to get to.
So I would say my biggest accomplishment was the role I was able to play in helping to formulate and pass the 2017 tax reform. It's indisputable that it was like the most transformative tax reform since the 1980s. Maybe it goes further back than that. And I think it was extremely constructive. I think it's worth remembering. We passed the reform at the end of 2017. It went into effect in 2018. 2019 is arguably the best economic year of my lifetime. I mean, strong economic growth. We were hitting record low unemployment levels, record low unemployment for all kinds of subsets of our population, African American, Hispanics. We had very low inflation. We had wage growth that was exceeding the rate of inflation. And by the way, wage growth was fastest for the lowest income Americans, so we were narrowing the wage gap. And now, where are we today? So obviously, we then went through this terrible pandemic and all the disruption from that. But here we are today. The federal government is taking in more revenue now under our reformed code than was projected to come in under the old code. And even corporate tax rate, right? We took the corporate rate from 35 to 21. Corporate tax revenue is running above its historical average as a percentage of the economy and as a percentage of total revenue. So I would say it's an unqualified success.
But some of those provisions are going to expire, particularly with respect to expensing capital investment.
Right.
And what are the prospects in the new Congress of extending those?
So that's going to be a big challenge, and you're absolutely right. And that's, I think, one of the most constructive elements, right? By allowing full expensing on CapEx, you lower the after-tax cost of making that investment, and that kind of investment is what enhances productivity, leads to stronger economic growth and rising wages, right? So that's really important that be made permanent. And the question is, can a deal be done with a Republican House that would want to make those provisions permanent, and Democrats in the Senate who would not be very enthusiastic about it, despite the record of success? And I think that's going to be a big topic of discussion next year.
So that's one thing yet to do, or address at least, the question of the expensing of capital investment. Also, as you mentioned, crypto is something yet to be done. You've also been outspoken about the Fed and various aspects of the Fed, and not least the regional presidents and exactly how they're chosen in the review process. We now have a new nominee for Chicago, new president of the Chicago Fed, in Austin Goolsbee, whom we know well, distinguished economist, although part of the Obama administration. Do you have hopes, in effect, there will be real reform in that area as you see it?
So, I think we need more transparency in that area. I've been arguing that we ought to be able to, we in Congress who have the responsibility of oversight, after all, let's be clear, Congress delegates its authority to the Federal Reserve to conduct monetary policy and to supervise our big financial institutions. That's ultimately our responsibility to conduct that oversight we need to have information, and that has not always been forthcoming. I'm also concerned that the regional banks in particular have really strayed outside of the monetary and regulatory mandate of the Fed. We saw the leader of the Minneapolis Fed actively in lobbying for education reform, K through 12 education reform in Minnesota in a partisan way that's completely outside of the mandate. So, yeah, Mr. Goolsbee is certainly academically and professionally qualified, but he has had a political past, and I hope that he kind of checks that at the door when he goes into the job, because this shouldn't be a politicized institution.
It shouldn't be, but what is politicized is the Senate. I want to ask one last question about Pennsylvania. There's going to be a new senator now. It's going to be a Democrat succeeding you, and not a Republican. What happened there?
Well, I was surprised. I think Dr. Oz was actually a good candidate who ran a good campaign. He had the very difficult challenge of going through a very bloody primary, got beat up to a very large degree. And then at the top of the ticket, our gubernatorial nominee was losing the state by epic proportions. I mean, he lost by 15 points in a state that almost never goes by a margin that big. That's a lot of headwind for everybody who's down ballot. And Dr. Oz was not able to overcome that headwind. I mean, he lost by, I think, about 4 points. It's a lot better than 15, but it doesn't get you across the goal line. I think in the end, it was an environment that was just really tough.
I want to be very careful with one thing. We were talking about Samuel Bankman-Fried, and you said gross mismanagement, which I think personally he's admitted to. He said that he wasn't paying enough attention. You weren't necessarily accusing him of anything, any wrongdoing, any criminal wrongdoing, because we don't know what happened.
We don't know. I mean, look, there's some apparently very bad things happened, and in the United States of America, taking customers' money and lending it to your affiliated hedge fund is probably a criminal violation. I'm not a criminal lawyer, but I'm not a lawyer at all. But I'm pretty sure that would violate a lot of serious laws. I'm not sure, given that he was doing this or whatever he was doing was taking place in the Bahamas.
Going to have to be a lot of investigation done before we know. Thank you so much, Senator. It's always such a pleasure to have you with us.
Thanks for having me.
Senator Pat Toomey, Republican of Pennsylvania. Coming up, we're going to go to the White House for a reaction to the jobs numbers from President Biden's senior advisor, Gene Sperling. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, it's all about the jobs numbers today in the United States. And boy, the jobs did come in. 263,000. That's at least 63,000 more than we expected. Also, wages went up more than we expected. To get a view from the White House, we welcome now Gene Sperling. He's senior advisor to the president and former director of the National Economic Council under both President Clinton and President Obama. I believe the only person to have done that twice. So thanks so much, Gene, for being with us. Give us the reaction for the White House. Is it just unabashed celebration?
Well, what I would say is that this week did have a little bit of a Goldilocks feel, right? I mean, you'd like to have a week where growth gets revised up, where jobs are still strong, where real income's up, and yet at the same time, you've seen gas prices go down under $3.50, and you have the measure that we know the Fed looks at most, core PCE, come down, be only 0.2% as opposed to expected 0.3%, overall at 0.3 instead of 0.4. So I think when you are getting a week where you are seeing the recovery continuing, showing resilience, and starting to see the right movement on inflation, and in that part of prices that affects people's psyche and pocketbook the most, gasoline prices, seeing that coming down virtually everywhere. You're never at perfect Goldilocks, but that was a pretty good week, I'd say. Yeah,
and I don't want to try to rain on the parade at all, but there might be a little fly in that porridge for Goldilocks here, and that would be the wage increase. It was a 0.6% month-over-month average hourly wage. That's double what was expected. We're at 5.1%, and we just heard from Chair Powell this week concerned about that very issue.
Well, I'm not surprised you raised that, and I'm not going to accuse you of pulling the dark cloud out of a sunny day or sunny week. But I would say the following. We all have to have a little bit of humility when we're looking at this economy. We have never shut down and restarted the economy like we did during this pandemic. Even in 1918, Woodrow Wilson was conducting World War I. He wasn't shutting down the economy. So I don't think we can look month by month and say, well, even though the numbers went the right way, if you saw a month up on wages, which I think most Americans think is good news, that should somehow overrun the fact that basically you are seeing that even in the face of the Fed taking very tough actions, this economy is showing resilience. And I also want to say, it's not just gasoline prices. I mean, we've seen appliances, apparel, used cars. We've seen many things starting to go down. It's not good enough. We're not happy enough with 5 or 6% in core, inflation. But it is nice to see things moving in the right direction. And I think overall, this is still an encouraging week of economic news.
Yeah, and listen, I'm not trying to be what it was called a nabob of negativism. Some vice president once called it. I'm not trying to be that. At the same time, putting aside the fact that it's one data point, and of course we don't want to judge the whole thing by one data point, but do you agree with Chair Powell's overall approach that says we need to get demand down, we need to suppress demand some so that we don't have the gap between the job openings and the people seeking those jobs, because that is going to drive inflation?
Well, listen, I think we'd like to see more stable growth. I would have liked to have seen, better labor force participation numbers. There's a lot of questions being raised about long COVID and other issues, even though prime age labor force participation is pretty much where it is in 2019. So, but let's remember, you're seeing evidence of housing prices going down. You're seeing evidence that new leases and rents are starting to trend down. So I'm just saying that I think you have to look overall, and I'm not downplaying the importance of wages. We all know that's a significant factor. But I think if you look at the accumulation of the evidence here, again, I think it was a pretty Goldilocks good week in terms of jobs and growth, while still seeing some of the moderation in prices showing up in several parts of the economy.
Gene, going along the top line numbers, what about women when it comes to employment? What about people of color, black workers, Hispanic workers?
Well, right now there are hundreds of thousands more black and Hispanic workers working now than before the pandemic hit. So we've not only built back, as the president says, we've built back better. The unemployment rate's actually lower than it was for black and Hispanic workers. And most importantly, the number of people working is even higher. Now, the fact that there's always a differential is an unfortunate inequity in our country, and one that we're never going to celebrate. But I do think the overall numbers from, if you judge when the pandemic started or the month before the pandemic, shows significant progress on both the growth side and the return to even lower unemployment numbers.
So, Gene, you said it's sort of a Goldilocks month, at least this month. What comes next for the White House? You're going to have a different Congress. You're not going to have a majority in the House of Representatives. What are the plans? Where do you want to take the economy next?
Well, I think we're obviously going to keep pushing. As you know, two of the major legislative accomplishments we had were Democrats only, but the infrastructure bill and the CHIPS bill was done with bipartisan, votes. So this president has always made clear he's going to try to do those things. And obviously, you'll look for those areas where you can take executive action, like you saw with student loans. And I think one of the good things on the inflation side is that when you look at what was in the Inflation Reduction Act, a lot of those measures hit on January 1st, which is just a month from now, and that's going to be lower prescription drug costs, lower insulin, lower premiums for 13 million people. And if you're buying virtually anything related to your house or car that is energy efficient, significant, dramatic tax relief to lower prices. And I think one of the things we're going to be doing a little more is say, okay, we understand that during the election, all you wanted to do is just say there's global inflation and blame the administration. But the fact is, it's pretty darn clear that all of the steps being taken, from releasing the Strategic Petroleum Reserve to the Inflation Reduction Act, are happening on our side. Now that they have some legislative responsibility, I hope they'll feel more pressure to work with us on things that can moderate costs for families.
One last one, Gene. You were brought in part to be a coordinator for the American Rescue Plan. Do you have a sense of how much of that money has not been spent yet? And the same question for the bipartisan infrastructure.
Well, on the American Rescue Plan, I would say the overwhelming amount of the funds have been allocated and committed. There are some areas where the money's obligated, but you don't necessarily want every bit to have been spent. If somebody's doing an affordable housing program, that's a good thing. That's good for inflation. That's good for equity. Those, obviously, when you're building housing, that's going to take a little bit of time. On schools, we don't want them to spend all their money in like a half a year. We want to see them have high-impact tutoring, after-school programs, things to help with learning loss. We want to see that over 2-3 years. So I think what you really want to look is, where's it being spent well? I think when you look at these cities and county leaders across the country, they consider this precious funds, and they're using it to both come back and deal with a lot of the aftershocks or after effects of the pandemic, from learning loss to higher mental illness, higher homelessness issues. So, you know, won't surprise you, I'm a pretty big fan of giving states and cities and people the ability not just to recover, but to deal with the continuing impacts of a significant downturn.
Doesn't surprise me one bit. Thank you so much to Gene Sperling. He's senior advisor to President Biden. And this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David West, and we're talking about the jobs numbers, and it's high time we figured out how the markets are reacting to those numbers. For that, we turn to Abigail Doolittle.
Yeah, so we're looking at a sharp reaction, or at least we were earlier, the second sharp reaction of the week. And earlier, we had stocks down more than 1%, 2% for that NASDAQ 100 when this hot jobs report came out. Now down just about 0.4% for the S&P 500. And that would take on the point, it wasn't so hot. You know, there's so many reports that come in with bigger misses or bigger beats, and stocks don't react as much. It just shows you how tightly wound investors are. The bigger reaction that's holding, that's in yields. We have yields sharply higher.
Well, particularly in the 2-year. I just took a look at it, and the 10-year's up, but boy, the 2-year is really up.
Yeah, the 2-year yield up about 10 basis points right now. Off of its high, though. It had been up about 15 basis points. These bond traders completely dislocated once again, trying to figure out how much the Fed will have to hike as this year progresses.
I think the Fed's trying to figure that out as well.
Indeed.
Thank you so much to Abigail Doolittle. Coming up, we're going to turn to an economist to interpret those jobs numbers. Betsy Stevenson, professor at the University of Michigan. She's former chief economist at the U.S. Labor Department. And this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David West, and I want to keep you up to date with news from all around the world. And for that, we turn to Mark Crumpton here with the first word.
David, thank you. It's the sort of jobs report that boosts chances of higher interest rates from the Fed. U.S. employers added more jobs than expected in November, and wages rose by the most in almost a year. Payrolls grew 263,000 last month. Average hourly wages rose twice as much as forecast. President Biden has signed a bill that averts a potentially crippling nationwide freight rail strike. The measure imposes a labor agreement hammered out by rail companies, union leaders, and the Biden administration. We spoke with Labor Secretary Marty Walsh.
There's some very good provisions in the contract. It wasn't like it was a bad contract. 24% increase, 85-15% split on health care, which they preserved. They were able to get some work rules changes. They were able to get 3 unpaid days off. The issue of sick time needs to be, the companies need to sit down with the unions now and have a serious conversation about 2 issues.
The president called the deal a victory for workers. The public will get its first look at the U.S. Air Force's new B-21 bomber today. All we've seen so far is an artist's rendering of the plane. The B-21 will be unveiled at a Northrop Grumman factory in Southern California. Visitors will have to turn in their mobile phones, and photographers will be allowed to shoot only from certain angles. The B-21 will replace the aging B-2 bomber. The talent war is ending on Wall Street. Bloomberg's learned that JP Morgan Chase, Bank of America, and Citigroup are all considering plans to cut bonus pools for their investment bankers by as much as 30%. Some low performers won't get bonuses at all. Job cuts and slumps in deals leave staff with fewer options as banks slash pay. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. Well, so far we have heard from a sitting U.S. senator about the jobs numbers. We've heard from a senior advisor in the White House, but we have not heard from an economist. And so we welcome now Betsy Stevenson. She's professor of public policy and economics at Michigan's Ford School. Dr. Stevenson served as chief economist for the U.S. Labor Department under President Obama. So, Dr. Stevenson, thank you. We always enjoy having you on Jobs Day. Give us your best take on what we see in these numbers. It certainly surprised, I think, a lot of people.
Well, I think they surprised a lot of people because they look so strong. I mean, certainly wage growth is on fire. We see, job growth that is outpacing, really almost any month prior to the pandemic. So we just have this really on fire job growth. And, we're asking ourselves, where are the workers going to come from? How tight is this? What is this going to do to wages? Okay, that's the good news. But now I'm going to tell you that I think this report overstates how strong the labor market is. We're all reacting to that, but I think we want to dig a little bit deeper into it. And you see things that suggest that maybe there is a slowdown in the labor market a little bit more than what's suggested. So, for example, in the household survey, it showed the number of people holding jobs actually declined. It did not increase. If you look at the share of people unemployed, while the unemployment rate was unchanged, if you look within the unemployment rate, you see that the share of people who are unemployed are more likely now to be job losers than job leavers or entrants to the labor market. If you take a look at where the job growth happened, it was happening primarily in the two sectors that have not fully really recovered from the pandemic: leisure and hospitality, education and health services. And we see some weaknesses in other sectors that have had disproportionate growth. Most notably, transportation and warehousing has just been on fire, adding jobs over the last year, and they actually had a decline in jobs. So I think if you dig into the report a little bit more, maybe it's, we get one of these things where it looks super, super strong, and next month we're going to come back and be like, oh, maybe it wasn't quite as tight as we thought.
That's that warning we always get about a single data point. You got to be careful of those single data points. But this is when it's a great luxury to have a labor economist explain these things to us. We heard from Chair Jay Powell earlier this week about the JOLTS numbers, that there are so many openings, people looking for jobs, people are looking to hire people more than people are looking for jobs. But more simply, how many jobs do we need to add a month in order just to break even, to have neutral? Because this is 263,000. I used to think it was 100,000, 110,000. Bloomberg Economics says maybe it's only 35,000. As long as you're adding more jobs than you're adding people to the workforce, doesn't that make a lot of pressure on the labor market?
Well, yes, but that's the big question is where will the labor force participation rate stabilize? How many people want to work? And also what's going to happen with immigration? Are we going to see people continuing to come back into the United States? Right now in this jobs report, we did not see the labor force participation rate go up, but I think it's worth pointing out we also didn't see the number of people holding jobs go up. So there's a consistent story in the household survey, which is people aren't getting more jobs and we're not seeing more people come into the workforce. We have been seeing over the past year a growth in foreign-born workers holding jobs. So if we continue to bring more immigrants in, then we can and want to add jobs for them to take. But I also think that there are people in the labor market who are still going to return. We have labor force participation rates have fully recovered for college-educated workers, and they've come pretty close to recovering for workers with only a high school degree, but it's that middle ground where labor force participation is down. We also see more broadly labor force participation rates haven't fully recovered for men relative to women. Remember, it was women who got hit hardest, but it's the men who've been the slowest to come back. And we're also seeing that if we look within racial categories, it's white people who have been slower to come back compared to Hispanic or African Americans who've come back at faster rates. So I think there's still some room to bring people back into the labor force. And that means that we need to be adding more jobs per month than an estimate of like 30 or 40,000, maybe something closer to what you would have thought 100 or 150,000 could be neutral job growth. But certainly 263,000 is not neutral. It's a lot of pressure on the labor market. But realize things like, the tech sector's been telling us they're making layoffs. What we saw in the BLS report is they were gangbuster hiring again in November. I think the sector's probably going to start to slow down, and those high-profile layoffs indicate that we should, take the very large increase in jobs in the information sector this month with a grain of salt.
So, Professor, let's go back to the demographics just for a minute, particularly people of color, black workers and Hispanic workers. I think what you just said is that actually they're gaining faster compared to white workers. But last time I checked, their unemployment rate was higher than it was. How long will it take to catch up?
Well, I was talking about labor force participation in particular. So it's who's deciding to come back and look for work. And what we're seeing in those racial differences is that people of color have been returning to work, particularly, again, women. It's women who've been returning faster, and that's true among people of color as well as white women. The unemployment rate gap, this is an ongoing problem that, the unemployment rate of minorities tends to be about double that of whites, and that is true in a strong economy, and it's true in a weak economy. And that's one of the reasons why when we look at an unemployment rate that's at record lows, it's at record lows, but those are really low numbers for some groups of people. And you're still looking at other groups of people where, you might have 1 in 12 who are unemployed.
Finally, Professor, we did hear from Jay Powell, the chair of the Fed, this week. And as I understood what he was saying is one of the things we need to do in order to address inflation is we need to get the demand for workers down. Because right now we have too much demand for workers compared to how many workers are available. Do you agree with that? Do we need to get the demand for workers down?
Let's be clear. The demand for workers is a derived demand. It comes from our demand for stuff. What Jay Powell needs to get down is the demand for stuff. And that should lead to a decrease in demand for workers. It's not necessarily that we want, to hire fewer people or produce less stuff. We want to make sure that the supply in the market is, in sync with demand so that we don't have raising prices. And what we're seeing is people have just had an insatiable demand, particularly for goods, over the last couple of years, and it's taken up for services. We see things like airline prices are increasing quite rapidly right now. As more people want to get on planes than there are planes or workers, employees to drive them. So when Powell is talking about, we need to see a decrease in demand for workers, what he wants is to see the whole market in balance where demand is equal to supply. So I do think we're going to have to see in some sectors a slowdown in demand for workers compared to what we've seen over the last few months. Yep. But I don't think anybody's saying we want fewer people working. Right. We just want to see our entire economy brought back into balance with stable prices.
Very helpful clarification. Thank you so much. And always thank you for being with us. It's Betsy Stevenson. She's University of Michigan Professor of Public Policy and Economics. Coming up, we're going to take a specific look at the state of the manufacturing industry in the United States with Jay Timmons of the National Association of Manufacturers. This is Balance of Power on Bloomberg Television and on radio. The This is Balance of Power on Bloomberg Television and Radio. I'm David Western, where we're very focused on jobs today, but specifically we want to take a look in the manufacturing industry and how the manufacturing industry is doing in the United States of America right now. For that, there's nobody better than Jay Timmons. He's president and CEO of the National Association of Manufacturers. So welcome to New York. Great to have you here, Jay.
Good to be here.
Okay, so before we get to the jobs part of it, tell us about the ISM numbers, because we came in at 49. It was lower than we thought. It looks like it's in retrenchment. What's going on with manufacturing?
It's a little softer than I think we expected, but you know, it's really right there at that 50% number. So technically, it shows some softening, but I think we're gonna pull that number up in succeeding quarters and months.
Is that reflecting lower demand for products?
Well, part of that is there has been so much demand and so little supply. I think the demand was catching up, and so now we've got some excess inventory. I don't think that's going to last for long, though.
So talk about the job situation and what we're seeing. We heard Jay Powell, the Fed chair, earlier this week talking about this mismatch, about people needing to hire more people they can find. What's going on in manufacturing? Do you have that mismatch there?
We continue to have that. So pre-pandemic, we had about 400,000 open jobs. And post-pandemic, we're averaging every month about 830,000 open jobs. That's the challenge. But the good news is we've actually had 2 years of record growth in job creation. So in the last 2 years of the Biden administration, we've had higher job growth in manufacturing than we've had at any time since the 2 years of 83, 84 in the Reagan administration.
So what happens to close that gap? I mean, you could pay more money, right?
So we're already the highest paid sector of the economy, averaging $97,000 per job. So
is that right?
Yeah.
Average $97,000?
The average, right, exactly. Some make more, some make a little less, but yeah.
So are you seeing wage inflation, though, in manufacturing?
Yeah, we've had 4 consecutive years of record wage growth in the sector. That's been made possible, by the way, you know, we're talking about policy down in Washington. That's been made possible by those tax reforms that were enacted in 2017. So we've had record investment, record job creation, record wage growth because of those reforms that were made. I
want to come back to those reforms because some of them could lapse, and I want to talk about that. But before we get to that, is there a skills mismatch? I mean, I'm trying to figure out why it is you've got, what is it, 830,000? What did you say?
On average, 830,000 every month open.
Why is it a skills mismatch? Where are those people?
Why
aren't they coming back into the workforce?
So it's a little bit of that. It's also an outdated perception of what manufacturing jobs are all about. Look, my grandfather was in manufacturing back then. It was dirty, dark, and dangerous. He wanted his son to go into retail. My father, who was in retail, wanted me to be a lawyer, and I didn't. I dropped out of college, but every generation wanted something different, and now we're going full circle as people learn more and more about what manufacturing jobs are all about, how high-tech, how futuristic, how rewarding they are. You're starting to see more people look at manufacturing as a career. As an industry, we've taken it upon ourselves to make sure that we're highlighting that. Our Creators Wanted campaign at the NAM and the Manufacturing Institute is trying to show young people what these jobs are all about.
So wrap up here with the thing you raised, which is the Tax Cut and Jobs Act, right? Is what it's called. That essentially allowed you to expense capital investment, as I understand it. So that's going to lapse.
Immediate expensing, interest deductibility, and the research and development tax credit are all coming to an end at the end of this month. We need Congress to renew that to be able to not only keep those great reforms in 2017 in place, but to also add to the benefit that we've received as an industry and as a country with infrastructure investment and the CHIPS and Science Act in this administration.
Any prospect in the lame duck of getting that done?
Yeah, I think, look, I don't know any member of Congress that wants to see the economy falter, and that is one sure way for the economy to falter if we don't renew those tax extenders.
You spent a fair amount of time looking at Capitol Hill. What do you think might be in the new Congress, particularly with the new majority in the House, for manufacturing?
Well, you know, one thing I'd like to see happen, David, and I think we can do this if we really focus on the economic needs of this country, and that is immigration reform. It probably will need to be tailored, so we're thinking H1 or H2B, H2A, as well as taking care of the temporary protected status. So think of the Ukrainians, the Afghanis that we brought here but can't get jobs. those are real problems that I think we need to address.
Is that a fairly quick way to deal with that 830,000 shortfall?
It's one way. It's one way. We have a declining population base in the United States. We need to supplement that with those immigrants who can work in some of these jobs that aren't being filled. And by the way, that's all sectors, not just manufacturing.
Do you have a bigger problem with the Republicans than Democrats up on the Hill on that issue?
So I think if you really target and make it a very narrow focus on the things that will directly impact our economy, I think you'll get bipartisan support.
The specific workers we need in this economy.
Exactly.
Thank you so much, Jay. It's really great to have you, and particularly great to have you here in New York. That's Jay Timmons. He's National Association of Manufacturers President and CEO. Coming up, we're going to hear from the San Francisco District Attorney about what her city is doing to fight crime. This is Balance of Power on Bloomberg Television and on Bloomberg Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Crime is an issue in many big cities across the country, and our San Francisco Bureau Chief, Karen Breslau, sat down with San Francisco DA Brooke Jenkins to talk about her approach to this problem.
The DA's office and its enforcement of the laws and its ability to promote accountability directly impacts our economy here in San Francisco. When people feel as though they don't want to come here to shop, to visit, if businesses feel the need to leave, if workers don't want to return downtown, that affects our economic engine here. And so what I have done is to commit myself and our office to doing the work that we are supposed to do, which is, again, promoting accountability for the crimes that are committed in San Francisco. I've said, and I've made it very clear, all crime is illegal again in San Francisco. There will be some level of consequence for the people who commit those crimes so that we can protect that economic engine. These retailers, these businesses, they provide jobs that our residents need in order to support their families. We can't sit by and allow businesses to feel the need to move to other states because crime is too much of a problem, not only for their business bottom line, but also for their workers who need to be able to come safely to work. And so I'm committed to making sure that we protect those jobs and these businesses because that is what we need in order to remain the beautiful city that we are.
There's a perception that this beautiful city is lawless. What do you say?
I think we did rise to that level, quite frankly. I think that's what got us here to the point where we would choose to recall a district attorney, something that had never happened before in San Francisco's history. And so I certainly do think we reached that point where we all felt as residents, as business owners, that it was lawless here. I am doing everything along with the San Francisco Police Department, amongst others, the mayor's office and everybody else, to correct that problem. And I do believe for the last 4 months, we've been on a path to changing that and to changing it quickly. And so I think that message will spread to the people who have been committing crime. It's going to take time, but we will get there.
And so where are we 2.5 years after the murder of George Floyd, a great reform movement, criminal justice reform? What is the balance in creating true public safety for everybody in San Francisco and for cities everywhere? You're not alone in the challenges you face as the DA of a major American city.
I think we all, of course, got a very sad wake-up call when we watched George Floyd be murdered. And I think, of course, everybody had a visceral reaction, and that made many people say, maybe we should do away with police. Unfortunately, I think we've learned that we need police in order to be a safe society. And so we've had to figure out that we need good policing, we need effective policing, we need unbiased policing. But we need police. And so I think we're now at the point where we have accepted that law enforcement is a necessary component of a functioning city. And I think San Francisco now recognizes our value and the role that we play. And I certainly believe that we are being implored to do our jobs because our residents and our business owners and our visitors have become fed up with the state of affairs with respect to crime in San Francisco. And so they're imploring us to do our jobs. And so what I've tried to commit to them is that we can still, right, push for those reforms, improved policing techniques, more fair treatment in the criminal justice system while still keeping them safe.
That was San Francisco DA Brooke Jenkins talking with our San Francisco Bureau Chief Karen Breslau. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we're going to talk to former U.S. Ambassador to Poland, Daniel Fried, about President Biden yesterday suggesting he might just be willing to sit down with President Putin. And that does our Balance of Power on Bloomberg Television and on radio.